Welcome back to Strongman Personal Finance. I am your host, Christopher Bell, certified public accountant, long-term Boglehead investor, author of the book, Stop Being a Broke Loser. It's on Amazon for $3. And hater of the terrible financial advice that is running like wildfire all over YouTube. Now, today's video, we're going to talk about clean energy fuels. We're going to jump right into it because I like to review the stonks that Wall Street Bets just seems to love. So, Clean Energy Fuels is basically a company that makes renewable natural gas from cow farts. Okay, that's basically what they do, but we'll go a little bit more into it when we look at their 10K, which is their annual financial report. So right now we're on Robinhood Stock, and I just like to look at the previous returns, just see what's happened to the stock. So it's up 1.5% today. Okay, whatever. It is down 3% in the last week, up 33% in the last month, down 22% in the last 3 months, and up 370% in the last year. So it looks like before November 2020, there really wasn't that much going on for this stock, or there wasn't much excitement going on for the stock. And then right after that, you see this massive explosion. Now, I wonder if that has something to do with Wall Street Bets and Reddit, but who knows? Maybe something happened with the company that really helped rocket this stock up in the last year. And in the last 5 years, it's basically been almost a penny stock until November 2020, which is kind of scary because it's really terrifying to me when I see a stock explode like that, because it's probably going to go down right after that. That's usually what happens if you have this parabolic increase over a short period of time, which you can kind of see what happened. It freaking shot up, and then it's been down ever since. So let's go ahead and look at the 10K. And that's my technical analysis, ladies and gentlemen, because I don't do that crap. So we're looking at the 10K, which is the company's annual financial report. Clean Energy Fuels Corporation. This is their last report as of December 31st, 2020. So let's go read about their amazing cow fart business. What do they do? It is a leading renewable energy corporation focused on the procurement and distribution of renewable natural gas, cow farts, and conventional natural gas in the form of compressed natural gas and liquefied natural gas. So like liquefied cow farts. That's pretty cool. All right. So let's see some of the products they make. Okay. So here's some of the ways they make money. So they sell environmental credits, which is kind of a joke because basically the government is subsidizing them. So the government gives them a certain amount of environmental credits and they can sell them to other companies. And it actually makes up a decent part of their revenues, which is why I don't like this company. But you'll see what I'm talking about in a minute. All right, so they sell environmental credits, so they're government subsidized. They sell O&M services. I believe that's operations and maintenance. Yep, so they provide maintenance to clean energy-owned and customer-owned fueling stations. Station construction and engineering. They design and construct fueling stations or sell and lease them to their customers, okay? And grants programs. We apply for and help our fleet customers apply for federal, state, and local grants. Okay, so what I'm seeing right here is they mostly sell cow farts in liquid form. They sell environmental credits, which is government subsidization. Is that even a word? I don't know. O&M services, so they help maintain their freaking fueling stations where they pump out their liquid cow farts. And they help construct the stations. Okay. So let's look a little bit more at how they generate their revenues. So we're going to go to management's discussion and analysis. And they actually had a nice breakdown of where their sources of revenues are coming from. Excuse me. So if you look right here, you have their sources of revenue. You want to look at that because you can't just look at the income statement and say, oh, they made a certain amount of revenue. You want to see where the revenue is coming from. Because in the case of this company, they're getting a decent amount of revenue from frickin' these credits. I mean, I guess we can call them carbon credits, but whatever. So you look here, and for example, in 2018, their total revenue was $364 million. 26 million of that, almost 27 million, came from credits. And then the next year, their revenue was $344 million. And even though they got almost double the amount of credits, 47 million, their revenue actually went down. Wow, I'm seeing a trend here. So every year it looks like their volume-related revenue went down. Their sales, their station construction sales has kind of remained flat. I mean, I guess it's a little bit of increase. And then they've had these credits these government subsidies to basically keep them profitable for the few times they were actually profitable. So I don't like it. I mean, they're pretty much dependent on the government to either break even, and sometimes even with government help, they still don't run profits. But you want to definitely look at this kind of stuff to see where their revenues are coming from, especially from such a, it's not really speculative because it's been around for a while, and they provide cars that, don't produce a lot of greenhouse emissions, which is great. But if you want to put your money into a company, it's not just about saving the world and being liberal and amazing. So let's go ahead and look at their financial statements. Let's see what's going on with the company. So we go to item 8. All right. Revenues. 3 months. Oh, it's a quarterly. There we go. All right, here's the annual income. So basically, it looks like, if you look at their revenue, their product revenue, like we just looked at, has been going down every freaking year. And then their service revenue has basically remained flat. Now, 2020 probably had an impact because of the virus. So maybe the revenues will continue on and actually grow a little bit in 2021. But the thing is, I mean, even before the virus started, 2018 to 2019, their product revenue dropped by almost, what is that, $10 million? And that was offset by an increase in service revenue. But basically, their revenues remained flat for 2 years, even before the virus happened. All right, operating income and loss. So they barely scraped by with an operating profit in 2018 and 2019. And then they had a loss in 2020. But I can forgive them because of the virus. So their net income or loss, they had a loss in 2018 in the accounting basis, or the accrual basis of accounting. They had a profit in 2019 and a loss in 2020. Okay, not incredibly, appealing to me. Sure, maybe they'll get lucky and they'll continue to, or actually expand and really take over the renewable natural gas market. But, I mean, just looking at their revenues for the past 3 years, they're dropping. And a big part of those revenues, pretty significant chunk, is coming from credits from the government. So if you took out those credits, they'd probably be having pretty significant losses. Jeez. So impressed. I can see why Wall Street Bets just loves this company. I don't like it. I think it's too speculative. And there's a lot of competition with, renewable natural gas. Like you have electric vehicles, you have internal combustion engine cars, which everybody thinks are just going to go away. They're just going to poof away. But if gas prices go down and they stay down, this company's going to have a hard time competing. And I don't even know how many freaking cars use natural gas. I don't think it's that many in the United States. And they have fuel stations that are they have a decent amount of fuel stations in I think 39 states. But you compare that to the dominance that natural gas, and it looks like eventually EVs are going to have. I just don't see how this company really explodes and becomes a great, builder of wealth. I could be wrong, but, I mean, just looking at the numbers now, I really don't like it. All right, so next we look at the consolidated statement of cash flow. So we have net cash provided by operating activities. So they've had positive cash flow from their operations. But if you subtract out their freaking carbon credits, I mean, I would highly doubt that cash flow would be positive. I mean, it might be, but the government's basically helping this company stay profitable if and when it is actually profitable. All right, and when you look at it from a free cash flow perspective, which you take your net cash provided by operating activities and you subtract out purchases of deposits on property, plant, and equipment. So free cash flow is money they can use to basically buy back their shares or pay dividends. So you want a positive free cash flow, especially if you start collecting dividends from this company. I don't even know if they pay dividends. They might not. Does it even say payments of... I don't see dividends on their statement of cash flows. So maybe they don't. But, I mean, just looking at this, their free cash flow in 2018, so you had $37 million of operating cash flows and $25 million of outflows for property, plant, and equipment. So that's, $12 million of free cash flow. Then they had negative free cash flow, almost, $15 million in 2019. And they had a decent amount of free cash flow, positive free cash flow in 2020. So overall, I just have no interest in companies like this. I mean, this company's been around, it's been public for a long time. And I think if you wanted to buy this company, you probably missed your chance before the Wall Street Bets guys really started getting excited about this. Because when you see a parabolic increase like that, the stock's price is probably higher than its intrinsic value. So in that sense, I would stay away. I wouldn't invest in this company right now. I guess let the Wall Street Bets, fervor die down and let the stock tank if it does. And then if you really like the company and you really think they're going to succeed, then you can maybe consider investing in it. But, I mean, the cash flows aren't that strong. They're not really profitable. They're only profitable, 1 year? I don't like it. I don't know. They're too dependent on government. But anyway, that's it for clean energy. Very fascinating. You guys have a wonderful day.